European stock markets are lower today for the first time in 3 days on some disappointing earnings. Let's head to London now, where Linzie Janis has a closer look at the results and the sentiment. Linzie?
Hey, Eric, that's right. Well, companies are delivering some pretty disappointing results this morning. Also news that Japan's economy shrank at an annualized rate of 12.1% is undermining any what little confidence exists in these markets. Now, take a look at the levels here. You can see the FTSE down by 1%, the CAC down by nearly 2%, and the DAX in Germany down more than 1.5%. Now, the FTSE closed lower yesterday, but the DAX and the CAC were higher. And David Buick of BGC Partners this morning says they did exceptionally well to hang on to Tuesday's monster gains, which to all intents and purposes was just an overdue bear squeeze rally. He also says it would be folly to believe that banks are ready to leave the sickbay. Of course, financials had been leading gains over the last couple of sessions. Today, banks and basic resources stocks are leading the way lower. Now, earnings, as I say, are a big factor at play today. Bulgari, the Italian jeweler, has reported its biggest profit drop in a decade, and it's cut its dividend. Net income plunged by 89%, missing expectations. Its shares down on that news. But shares in Carrefour had been rising earlier despite missing estimates. It said net income fell 45% to €1.25 billion. And finally, shares in Roche are climbing this morning after it boosted its offer to buy the rest of Genentech. It ends a nearly 8-month takeover battle. Eric.